Hello, this is the Tradesight Stocks and Futures Market Preview for Wednesday, the 27th of August, 2014. Please let summer end soon. Here's a look at the ES front-month futures contract, also similar to the S&P, of course. Another day that looks just like the others. Horrible range, small gap up, didn't bother filling the gap, didn't do anything. We'll look at the action intraday here in a moment. Did have some better movement today on some of the stocks that we were looking at least. For the first time in a while, our top pick off the report actually triggered, which is the KERX, and that worked. I should also point out that the INFN that was on the report the other day didn't go far initially, had a big, again, these breakout patterns are definitely where you want to be. Would certainly be a lot more appealing if they would trigger and go on a day where the market's actually trading some volume. But we'll get back to that soon enough, down to the last 3 days of August, and they're going to be doozies and not in a good way. We're going to have a little bit of data tomorrow, but nothing major. We do have some significant data on Thursday, including initial and continuing jobless claims, second look at GDP for the second quarter, pending home sales and natty gas. Friday, we've got personal income and spending, Chicago PMI, and Michigan sentiment, but who are we fooling? Nobody's going to be here on Friday. So we've got a 3-day weekend ahead. Friday's the end of the month. It's the end of summer. It's a summer Friday, and it's the last day going into a 3-day weekend. No one's going to be around. Thursday will be the sucking sound you will hear will be the last 5 people walking out the door early and turning off the lights. And Wednesday, again, hard to know what to expect, but it certainly shouldn't be any better than what we've seen the last few days. So let's take a look at the NASDAQ volume numbers. And again, we've been focusing on this because it's so critical to trading. Again, last 1, 2, 3, 4, 5 days have all been below 1.4 billion shares. The 10-day moving average is now 1.4 billion shares, the lowest of the year by far. Somebody pointed out, they went back and looked at our reports from last year, and they felt like last year, even when the volume dipped, the market was a little more exciting. And there are individual days. You look at some of the stocks today off our report that worked, despite the fact that the market was not interesting. We've got several nice-looking charts for tomorrow, especially on the long side. Of course, there's not much to find on the short side because the market's been running up lately. So there can be individual days, but it's still you don't get a lot of follow through, and I'm going to show you a couple things intraday here in a moment just to give you an idea of what that means. Let's try to remember when I get there in a second this chart from today, which is the KERX, and this is a nice daily chart breakout. It was a nice formation. Our trigger was over 1752 and it triggered with market directional support. This stock itself, if you look at the volume at the bottom of the screen, actually had big volume yesterday and big volume today for the breakout. But if I go to the intraday chart, we'll skip over to that real quick. Let's talk about this briefly. What did we really get? I mean, from 1750, there's a breakout about 40 minutes into the market today. Market direction was green at the time, and it did run up to about, we got a 13 Comer sell signal that ended up being close to the high of the morning there, right up near 18, and it just couldn't get through beyond that, flat all day until the afternoon. Tried to break out again, came back in. So, you only get 30, 40 cents easy out of it. No risk, no harm, no foul, because it was a good trigger. But again, where would that go if the market was really trading? If there were more players here moving, I think the potential is so much bigger. And when we don't have action in the market and people trading, then even these great patterns don't go that far. And that's sort of the big problem. Here's a look at the ES. This is the S&P E-mini futures contract, again in 5-minute bars for the day. So you can see that we gapped up a little bit. We never were able to fill the gap. And I mean, we spent, 70% of today in that range between 1998 and 2000. That's a 2-point range on the ES. That's ridiculous. With maybe an hour spent above it, and that was only another 2-point move up. The total range high to low of the day is only 5.5 points, and we couldn't even fill the gap, which is a technical, usually a technical necessity. So that just gives you an idea overall of how bad things are right now in the market. There's just nobody around. We say it day in, day out. I hope that for people that are newer to trading, they really have their eyes open by this. They really start to learn how important some of this stuff is, because if you're over trading in August, most of the time you're not going to do too well. And so you got to be really picky. Again, if you stick to the good patterns and they trigger with some market support, even without volume, they might go a little bit, like we saw today on the KERX. I think probably the best pattern in the market I saw for the day, and it did work. But finding other stuff, that's a whole different story. All right, so that's it. We'll leave it at that. There will be a market preview tomorrow night. For Thursday, we'll have nothing for Friday. There's no point. That's going to be probably one of the. By the time we get through the holidays at the end of the year, this will probably look back at this coming Friday still as one of the least active 3 days of the year, I bet you. So, at any rate, have a great trading session. We'll be in the trading lab to help you out as you need it. And if you do like the content of this video, please like us on YouTube. That helps us out. Thanks.